What's up, everyone? According to Redfin, pending home sales fell 35% year over year during the 4 weeks ending October 23rd. This is the largest annual decline in at least 7 years. This is a huge number because it shows just how low buyer activity is right now, which will then predict the trends moving forward and heading into 2023. So today, we're going to take a look at Redfin's latest housing market update. We'll look at Realtor.com as well, and we'll see what's happening right now as we head into the last bit of 2022 and in the future heading into 2023. So let's dive right in. Until this month, the pullback in the housing market could be described as something of a return to pre-pandemic conditions before sub 3% mortgage rates ignited a home buying frenzy in 2020 and 2021. But now both mortgage purchase applications and pending sales are below 2018 levels. A 4-year setback is a serious correction. With mortgage rates still elevated, we are in for further sales declines. But those should eventually bring price relief to those who need to move this winter. So what Taylor Marr is saying is that if buyer demand continues to weaken, prices will have to come down to re-incentivize buyers to re-enter the housing market. This is good news for those buyers that were priced out of the market due to affordability issues. Once rates started their upward trajectory and prices still hadn't come down enough, some buyers simply could no longer qualify for a loan, or they just didn't want to pay the new higher amount that was now required. If prices come down enough to allow for buyers to actually get approved for a loan with the current rates and therefore make buying a house affordable, this could be a good thing to get the housing market going again. The other thing a slower market allows is the opportunity for buyers to negotiate. Unlike the past 2 years when buyers had absolutely no power and couldn't even do an inspection and had to bid way over asking, now buyers can look around and hopefully they can negotiate a lower price. They can also have inspections and negotiate repairs or credit, and in some cases ask the sellers for help with their closing costs or even to buy down their interest rates. The problem is inventory. According to Realtor.com, active inventory has continued to grow, increasing 36% above a year ago. But new listings are down again, dropping 13% from a year ago. This week marks the 16th straight week of year-over-year declines of new listings coming on the market for sale. Now, on the one hand, traditionally, the housing market does slow down this time of year as we enter into the holiday season, which we will be in the next few weeks. But this big of a decline is more than just seasonal. So what we're seeing is that houses are staying on the market longer, which is the growing active inventory, but a lot less sellers are actually putting their houses on the market. One of the reasons that sellers are not putting their homes on the market is because they're locked in. This means they don't want to trade their low interest rate, and if they refinance the last 2 years, it could be as low as 2.65 to 3% for a higher interest rate of around 7% if they were going to buy as well. The other reason is that if prices go down too much, sellers just won't want to sell unless they have to for a job or a family situation. And we can't count on new construction for inventory. According to the National Association of Home Builders, builder confidence has declined for 10 consecutive months. New home sales are down 14.3% on a year-to-date basis compared to 2021, said the National Association of Home Builders chief economist Robert Dietz. Moreover, sales are now down 1.9% on the same basis compared to 2019 levels that were prior to the COVID-related changes to interest rates. With rising lumber and construction costs, the median new home price was up 13.9% from a year ago. So sales are down, but homes are still expensive. However, it does kind of feel like builders are starting to understand this changing market and are beginning to lower their prices and offer buyers incentives. So that is a good thing. Let's get back to Redfin and look at the leading indicators of home buying activity for the week ending October 27th. As we said at the beginning of this video, Redfin reports the largest drop in pending sales in at least 8 years. Look at the blue line where we were a year ago. It's pretty similar to the gray line, which represents represents 2020, but the red line is way less for the same time of year. And I expect it's only going to get worse as we enter into the holiday season. The median home sale price was $365,725, up 5% year over year, but down 7% from a record high of $392,250 in June. Home sale prices fell from a year earlier in 6 U.S. metro areas. Prices declined 5% year over year in San Francisco, 3% in Lake County, Illinois, 2% in Oakland, California, and less than 1% in San Jose, California, Philadelphia, and Frederick, Maryland. Among metro areas with at least 500 pending sales during the period, pending sales fell the most from a year ago. In Los Angeles, down 59%, Las Vegas, down 56%, Miami, down 50%, Seattle, down 50%, Jacksonville, Florida, down 48%, and Portland, Oregon, down 46%. On average, a record high of 7.9% of homes for sale each week had a price drop, up 3.8% from a year ago. Now this is interesting. Redfin reports that new listings for sale are down 21% from a year ago, the largest decline since May of 2020. Now, I'm not sure why Realtor.com reports a 13% decline in new listings and Redfin reports a 21% decline. So I thought they pulled from the same sources, but I'm going to look into it and I will definitely get back to you. Months of supply, which is a measure of the balance between supply and demand, calculated by dividing the number of active listings by closed sales, increased to 3.1 months, the highest level since June of 2020. Now this is going to differ from market to market. Where I am in Montgomery County, Maryland, we have about 1.3 months of supply right now. If you know the data of where you live, definitely comment below and let us know. Homes that sold were on the market for a median of 34 days, up a full week from 27 days a year earlier, and the record low of 17 days set in May and early June. I expect this number will increase as we enter into the holiday season, unless sellers pull their houses from the market and then put them back on in the spring. 29% of homes sold for above list price, down from 44% from a year earlier, and the lowest level since February of 2021. I thought that was really interesting because, like I always say, real estate is very localized. Where I am in Montgomery County, Maryland, and DC, if a house is priced right and looks great, it is still selling in multiple offers and escalating way above asking, even now in November of 2022. What about where you guys live? Are you still seeing multiple offers like I am? Or are you just seeing more inventory and price reductions? Definitely comment below and let us know where you are, because that's the best way we can really see what's really happening in the housing market across our country. The average sale to list ratio, which measures how close homes are selling to their final asking prices, fell to 98.9% from 100.5% a year ago. This was the lowest level since August of 2020. So clearly things are changing. Just look at the line for 2020, the gray one, and you can see how things started to ramp up. Then 2021 and the beginning of 2022. And now it looks like a steep hill trajectory since June of this year, heading downwards. With the high interest rates and prices still too high, affordability is at an all-time low. Are things changing? Yes, of course they are. But to what extent? How far will the Federal Reserve go to fight inflation? And if they keep raising rates, will anyone want to buy or sell? And what is the other option? Rents are also at an all-time high. We need something to budge. And I think that builders could lead the way with giving buyers more incentives and attracting them to re-enter the housing market. Sellers can also help by offering buyers a credit towards their closing costs or to help them buy down the interest rate. If you are thinking of buying or selling right now, you need a professional now more than ever to help navigate the different ways to negotiate and to help get sellers and buyers to meet in the middle. I hope you guys got some value out of today's video. This is a crazy changing market, and I just think it's super important to bring you the most up-to-date information so you can make the best decisions for you and your family. If you did get some value out of today's video and you want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It just motivates us to make more videos. Thanks for watching. I do appreciate it. Bye!